Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about Russia's reserves. Now, if you follow the channel, you'll be fully aware that at the time of the invasion of Ukraine, Russia had assets valued at around about $600 billion, and around 300 billion of those assets were sitting in overseas financial institutions. So this was money and investments that Russia had with banks overseas, but relating basically to all of the trade that it was doing with those countries. Now, as a result of the invasion, the West decided to freeze all of the assets that they were holding, so around 300 billion of those reserves were no longer available to Russia, and they've been using the other 300 billion to fund some of their losses and the war in Ukraine. And in today's video, I want to give you an update as to what's happening with those reserves, because if Russia gets to the situation where those reserves run out, it's going to be in a nightmare situation in terms of finding cash to be able to fund the war further. So in today's video, we'll have a look at the breakdown of the assets at the time of the invasion of Ukraine. We'll then talk about what's happened to those assets, because there's been some developments recently. The European Union agreed to issue a $50 billion bond, but things don't happen overnight in the European Union. So I'll give you an update on the timing of that bond. And also the EU has decided to send some money to Ukraine in the interim. So I'll give you an update on how much has actually been sent over. We'll then have a look at what's happened to Russia's liquid reserves. And I can tell you that there's been a sharp reduction in the amount of liquid reserves. And we'll have a look at what's happened to the budget in the corresponding period, because one of the reasons why the reserves have gone down so much is because Russia is now diverting so much money to the war in Ukraine. And then we'll have a look at a really interesting forecast that's been put together by Bloomberg, which estimates how long Russia's got before those reserves will run out. And this is a chart which looks at the value of oil, because Russia's still receiving in revenue, so it's still receiving in cash, but it depends on how much it's selling that oil for, how long the National Wealth Fund can last to keep the war going. And then finally today I'll wrap up with my summary as to what I think the issues are relating to Russia, its reserves, and its ability to keep funding the war in Ukraine, and what the overall impact of all of that will be on the Russian economy. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. Genuinely mean it. If you're a subscriber or a watcher, thank you for doing that. If you're a long-term supporter, either through Patreon, where you can watch my videos advert-free and see them early, or YouTube membership, where you'll also get early access, or Buy Me a Coffee membership, really appreciate that long-term support. Helps to keep me motivated, and it's great to think that there's people out there who genuinely value my output. Thank you so much for that. And if you've bought me a coffee or sent me YouTube super thanks recently, thank you for the time and the effort and the generosity. I see every single one of those messages. Don't get time to respond, unfortunately, but thank you, really helps to keep me going. And if you want another more interesting way to support the channel, why not buy a ticket in the prize draw for this guy, which is Windswept Clock. I've talked about it many times before, so I won't go on about it too much here, but it's made by a British artist. Really nice piece, been in my collection for some time. It's the only one I've got, so it'll be going. It would look great in your place. So if you're interested, have a look in the details below and you'll see how to buy a ticket. At the time of Russia's invasion of Ukraine, it was estimated that Russia had assets valued at around $300 billion within Russia, and the majority of that was held in gold, cash, and other investments. And overseas, it was sitting on $375 billion worth of cash and investments. And the majority of that was sitting with overseas financial institutions. And this chart shows a breakdown of those assets as at the 24th of February 2022, which was the date that the invasion started. And what you can see here is that over half of those assets, $207 billion worth, were held in the Eurozone area. 67 billion were held in US dollars in the USA, 37 billion were held in British pounds in the UK, 36 billion was held in Japanese yen in Japan, 19 billion in Canadian dollars in Canada, 6 billion in Australian dollars in Australia, 1.8 billion in Singapore dollars in Singapore, and 1 billion in Swiss francs in Switzerland. So you might be sitting there thinking $375 billion. I thought the total overseas assets that Russia had was only $300 billion. And that's absolutely right, because before the West could actually clamp down and freeze all of those assets, Russia managed to move a lot of them out of those countries. And so the amount that's been frozen is sitting at 300 billion. And around 210 billion of that, the lion's share, is with Euroclear in Brussels, which is basically the way that the money was being transferred around. And this has been a subject of massive debate over the last 2.5 years. The USA and the United Kingdom have taken a very aggressive approach. They wanted all of that cash to be handed over to Ukraine to help it in its defence against Russia. However, the European Union has taken a much more conservative view and said that they can't actually do that because that cash actually belongs to Russia. And unless you can have some sort of law passed that says that Russia is no longer entitled to it, you can't just give it over to Ukraine because they're in some sort of conflict with Russia at the moment. And what the EU has come up with is an idea whereby the money that's being generated from those assets, so the interest that it's generating from the capital markets, can be used to help Ukraine. Now, interestingly, the EU has estimated that the total amount of interest being generated each year is around 3 billion euros, which seems very low to me. If I had $300 billion and I put it with financial institutions, I'd expect a higher return than 1%. I'd be hoping for 3 or 4 or maybe even 5% if the money managers were doing a good job. So $3 billion a year seems a bit light. However, that's the figure that everybody's agreed upon. And they've now decided that that $3 billion can actually service a bond of $50 billion. So basically what's going to happen is that bonds totaling $50 billion will be issued by all of the constituent countries that are sitting on these Russian assets. And that money will be handed over to Ukraine. And those bonds will only become repayable if the war in Ukraine ends and Russia hands a compensation payment to Ukraine, which I think is extremely unlikely, or they'll probably just run for perpetuity. So Ukraine probably won't have to pay them back if there's no definitive resolution to the war and they don't get any sort of compensation. So this is basically a way of Ukraine getting some help. It's another form of military aid using the assets that Russia owns. It's not actually dipping into those assets themselves. It's just creaming off the interest that's being generated, which, as I've said, I don't actually think it's generating enough. I think they could do a lot better than $3 billion per year. And it's now been announced that the legal framework for those bonds is being finalised, and it's expected that that process will be completed by October 2024, and that the funds will then be raised at the end of 2024. So Ukraine isn't likely to get any cash from those bonds until the beginning of 2025. So as I said, these things take a long period of time. I'm sure there's lots of lawyers who are poring over all of the detail at the moment, making sure that Russia can't sue anybody at the end of this process. And I'm pretty sure that Russia will start a high court procedure because that's the sort of thing that they like to do. But in the interim, it's now been announced that the European Union has sent 1.5 billion euros to Ukraine because obviously at the moment there are no bonds. So the cash that's being generated from those assets is now being skimmed off and given directly to Ukraine. There are two reasons why Russia's reserves are now under pressure. The first is that it's seen a reduction in its total income, so it's having to use its own resources to fund some of its investment. And secondly, there's been an enormous increase in defence spending as a result of the ongoing war in Ukraine. This chart shows Russia's daily earnings from fossil fuel exports dating back to the start of 2022, so just before the war in Ukraine started. And the different colours on this chart relate to the different types of fossil fuels. The bottom section relates to crude oil, the section above that is refined products such as gasoline and diesel. Above that we've got pipeline gas, then coal, and right at the top we've got liquefied natural gas. And what this chart shows is that before the war in Ukraine started, Russia was earning around 900 million euros per day, which is around $1 billion. Immediately after the invasion, the total amount Russia was earning actually increased as a result of rising prices of all of these different fossil fuels. And at one point, Russia was earning around $1.4 billion per day. However, as you can see, over the last 2 years or so, there's been a significant reduction in the total revenue that Russia is earning. And the current level of earnings is sitting at around $800 million per day, which represents a daily fall of around $200 million or around 20% against Russia's earnings before the war started. And on an annualised basis, that equates to $73 billion. So this is one of the reasons why Russia is now struggling, because it's lost $73 billion worth of income. This chart shows the breakdown of Russia's budgeted expenditure for 2023 and 2024. 23 shown by the black bars and 24 by the blue bars. And what this shows is that in 2024, the single biggest expenditure is on national defence, which has increased from 6.4 trillion rubles to 10.8 trillion, which in US dollar terms is an increase from $70 billion to $120 billion. Social spending, which was previously the largest single item in the Russian budget, has increased from 6.5 trillion rubles to 7.5, which is clearly now significantly lower than the 10.8 trillion rubles of spending on national defence. The budget for national security has increased from 3.2 trillion to 3.5 trillion rubles. Interestingly, the spend on the economy has reduced from 4.1 trillion to 3.9 trillion, and the budget for education and healthcare has remained entirely flat, 1.5 trillion rubles for education and 1.6 trillion for healthcare. And if you take a step back and have a look at this chart, you can see where the focus of Russia's expenditure is going at the moment, because the combined total of national defence and national security of 14.3 trillion rubles, which equates to around $160 billion, equates to the same amount that Russia is spending on the whole rest of the economy. And this chart really puts the change in emphasis on Russia into perspective. The scale on the left-hand side here shows the percentage movement in expenditure and goes from minus 20 at the bottom to plus 70 at the top. And across the bottom here, we've got all of the years from 2013 through to the budgeted level for 2024. The blue line on this chart shows the annual movement in total expenditure. And if we just look at the years from 2021 onwards, you can see in 2022, total expenditure increased by around 17%. In 2023, it increased by around 15%. And the budgeted level for 2024 is an increase of around 9%. However, if we now look at the red line, which shows the percentage movement in military expenditure, and just look at the years from 2021 onwards, in 2022, military expenditure increased by 47%. In 2023, there was a further increase of 30%, and the budgeted level for 2024 is almost 60%. And you can see from the divergence of these two lines that Russia is really now focusing in on that military expenditure at the expense of other parts of the economy. As I mentioned at the start of today's video, at the time of the invasion of Ukraine, it was estimated that Russia was sitting on around $300 billion worth of assets within Russia. Now, around half of those assets are held in gold. Russia has large gold reserves, which are rumoured to be held in the Kremlin, but nobody really knows exactly where they are. But the other part of the reserves are the liquid reserves, and this is referred to as the National Wealth Fund. So this is basically the liquid cash that Russia has to be able to fund some of its overspending. That's what it's been dipping into over the last couple of years. And this chart shows a breakdown of Russia's liquid reserves and compares the period before the war started, which is shown by the black bars, to the end of 2023, which is shown by the blue bars. And what you can see here is that the largest two classes are liquid assets, which are basically being held in cash, and Russian stocks, so investments into Russian companies. And the other categories are infrastructure bonds, where Russia's investing into infrastructure projects in Russia, VEB deposits, which are basically deposits that are being held with Russia's foreign trade bank, Ukraine euro bonds, and deposits for infrastructure projects. Now, out of all of these categories, by far the most important are the liquid assets. This is basically the National Wealth Fund that we're referring to. And as you can see, before the war started, Russia was holding 8.9 trillion rubles. Now, interestingly, when we convert that to dollars, the exchange rate before the war started was $1 to 75 rubles. So 8.9 trillion rubles at that time equated to around $181 billion. As you can see, as at the end of 2023, that figure had fallen to 5 trillion rubles, which in ruble terms represents a fall of 44%. That's a significant amount of those liquid reserves that have now disappeared. However, in terms of international purchasing power, the situation is far worse than that, because back at the start of 2022, $1 US was trading for 75 rubles. So 8.9 trillion rubles of liquid assets at that time would have equated to around 119 billion US dollars. However, the exchange rate at the end of 2023 was $1 to 90 rubles. So that means that the liquid assets of 5 trillion rubles equated to around $56 billion. And that represents a fall in terms of international purchasing power of around 53%. Now that is a huge amount for Russia to have lost in a 2-year period. Now if we look at the second biggest category here, which is the investment into Russian companies, Russian stocks, you can see that before the war started, the government was holding 3.3 trillion rubles worth of investments. Today, it's valuing those investments at 4.6 trillion. However, over the last 2.5 years, the liquidity of Russian stocks has fallen off a cliff. Previously, international investors were buying shares in Russian businesses. However, because of the sanctions and all of the other issues surrounding Russia, none of those investors are interested anymore. So you may be able to value those shares at a higher level on your balance sheet and show that your investments are increasing. But in terms of being able to convert that to cash, it's going to be very difficult because there are far fewer buyers today of shares in Russian businesses than there were 2.5 years ago. And also, Russia has acquired stakes in companies as a result of the fact that companies from the West have walked away. Russia has nationalized a lot of assets and businesses. So therefore, it's increasing the amount that it's showing as its investment. But in terms of being able to realize that investment, I don't think you'd be able to convert that to cash to be able to fund anything going on in Ukraine. Now, if we take a step back and look at the overall picture here, at the start of 2022, Russia's wealth fund was valued at 13.6 trillion rubles, which at the exchange rate of 75 to $1 equated to around 181 billion US dollars. At the end of 2023, the total value had fallen to 12 trillion rubles, which at an exchange rate of 90 to 1 equated to $133 billion. So that represents a fall of 27% in purchasing power. However, in terms of the reality of the situation, you have to look at the liquid assets because the Russian stocks, the infrastructure bonds, the VEB deposits, the Ukraine euro bonds, and the deposits for infrastructure projects are not liquid. The only cash that Russia has available to it is the liquid assets, and they've fallen by 53% over the 2-year period we're looking at here. This chart, which has been put together by Bloomberg Economics, forecasts the time when Russia will run out of cash from its national wealth fund. Now, obviously, there's a lot of moving parts in terms of what might happen over the course of the next couple of years. And the main two factors as to how much revenue Russia will receive in are the price that it's going to sell its oil for and the amount of oil that it's actually selling. The left-hand vertical side of this chart shows Russia's crude oil extraction in millions of barrels per day and goes from a scale of around 8 million barrels per day at the bottom to 12 million at the top. And across the bottom section, we've got 5 different columns relating to an assumed oil price for Russian oil. First column is $40 per barrel, second one is $55, third is $70, fourth is $85, and the fifth is $100 per barrel. So what we've got here is a grid whereby you can look at an assumed price across the bottom and then the total amount of oil that Russia is extracting on the left-hand side. And the combination of those two factors then gives you an indicated date as to when the National Wealth Fund would run out. So if we start off by looking at the two extremes, if Russia's oil price was to fall to $40 per barrel and the number of barrels it was extracting fell to 8 million, then Russia would run out of cash by the fourth quarter of 2024. However, if we look at the opposite end of the spectrum, if Russia's oil price increased to $100 per barrel and it increased its output to 12 million barrels per day, which is around 3 million barrels higher than it's extracting at the moment, then Russia's cash reserves would last until the first quarter of 2098. Now, in terms of dealing with the left-hand side of this chart first, in terms of the amount of oil that Russia is pulling out of the ground, Russia has cut back on its production significantly over the last 18 months. It's actually announced 2 voluntary cuts of 500,000 barrels per day. So the total extraction has reduced by 1 million barrels per day. And there are question marks over whether or not Russia did that voluntarily as part of its agreement with OPEC+, or if it's experiencing production problems as a result of the fact that it's lost its partners like ExxonMobil, BP and Shell, and access to technology, which are now causing problems at all of those facilities. But if we assume that the current level of production remains at around 9 or 10 million barrels per day, then we really need to make a call as to what the price of the oil that Russia is selling is going to be. Now, as I'm sure you'll be aware, the price cap that was introduced by the West in December 2022 was set at $60 per barrel. But Russia is achieving better than that. It's currently selling its oil for somewhere in the region of $75. But if the West was able to properly police that price cap and bring the price of Russian oil down to $60, then you can see that we've got a defined timeline here as to when Russia would run out of cash. And the Bloomberg Economics has highlighted $55 per barrel as being a realistic level. And if Russian oil was reduced to that price, you can see that at 10 million barrels per day, it would run out of cash by the third quarter of 2026. But at 9 million barrels per day, which is roughly where it's producing at the moment, it would run out in the fourth quarter of 2025, which is just over 12 months away. And I think what's interesting to look at here is that as you move further right across this chart, as the price of Russian oil increases, Russia has a lot more headroom. If it can sell its oil at $70 per barrel, then potentially it will last until the fourth quarter of 2035 or 2040. And if it's achieving $85 per barrel, then it would probably be somewhere in 2060s. So the key issue, I think, for the West here is that the price of Russian oil needs to be contained, it needs to be reduced. And if it's reduced below the $60 cap that's been set by the West, it would mean that Russia's reserves would run out at some point over the next 12 to 18 months. So what's the summary and conclusion today? Well, I wanted to post this video because I've got lots of comments over the last 6 to 12 months from people saying, can you please give us an update on the National Wealth Fund? What's happening to Russia's reserves? And as we've seen from the data in today's video, Russia has been dipping into its reserves quite significantly. And in fact, those liquid assets, which are really the key part of Russia's reserves, are down by more than 43% compared to where Russia was sitting before the war started. And obviously, that excludes all of the overseas assets that have been frozen and are now being used to produce bonds. So a 43% fall is obviously quite serious. But actually, when you take into account what's happened to the Russian ruble, because there's been a significant deterioration in the value from around 75 to $1 to the current level of around 90 to $1, the international purchasing power of those liquid assets has fallen by more than 50%. So over the last couple of years, Russia has wasted more than 50% of its reserves. And these reserves were built up over a long period of time. This isn't easy come, easy go. This is something that you need to protect. And because Russia is no longer dealing with the West and it's seen a huge reduction in its income, as we saw, it's down by around $73 billion compared to its annual income before the war started. Russia's being squeezed from both sides. And the other thing that we looked at in today's video is what's happening with defence spending. And there has been an astronomical increase in the amount of money that Russia is now spending on defence. It's spending the same on defence as it is on absolutely everything else in the economy combined. So this really tells us that Russia is laser focused on keeping the war going. It's the number one priority on the budget side of things. But the problem that Russia has got is because its income is falling and its wealth fund is also reducing, at some point it's going to run out of cash. Now, the forecast that we've just looked at, put together by Bloomberg, assumed a variety of different factors in terms of the price of Russian oil and how much oil it's selling. However, that didn't really take into account all of the other problems that Russia is now facing. If you've been following the channel, you'll know that Russia recently announced a gasoline export ban as a result of the fact that it was nervous that the people and the farmers in Russia wouldn't have enough to be able to feed themselves. And that tells us that there are big problems going on in Russia right now, because Russia is pulling 9 or 10 million barrels of oil out of the ground every single day. And if it can't afford to export any of the gasoline for an 8-month period, because that ban was recently extended, that tells us that there are serious problems in that industry. So there is a possibility that Russia's income could continue reducing if it can't strike the same sort of deals with China and India, if it can't pull enough oil out of the ground because it's having production problems, or if it simply can't find enough tankers, because as I reported recently, the dark fleet that's been moving a lot of the Russian oil is now being clamped down upon. The European countries have agreed that they're not going to let those ships move through their waters anymore. They will seize those ships and stop them from passing through. If all of those factors start to impact on Russia's income, then that's going to drain its reserves even faster. So there is a genuine reality here whereby over the next 12 months, Russia could run out of its liquid assets. And if it gets to that situation, it simply won't be able to keep funding the war in Ukraine. So the overall summary of today's video is that since the start of the war in Ukraine, there has been a huge reduction in liquid assets in Russia. The level of liquid assets is down by over 43% in ruble terms, but almost 54% in US dollar terms. Russia is continuing to increase its defense spending at a time when its income is falling, and as a result of that, there is more and more pressure on those reserves. And at some point over the course of the next 12 to 18 to 24 months, there is a genuine reality where Russia could run out of cash, and therefore it wouldn't be able to keep funding the war in Ukraine. And I think realistically, that could be the best chance that Ukraine and the West have for bringing some sort of conclusion to this problem. So hopefully you've enjoyed today's episode. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. Don't forget, if you're interested in the Windswept Clock, you can find the details below. And here's something to put a smile on your face.